John Defterius is in Vienna, where OPEC meets Thursday and Friday. Rumour is the pricing's at the upper end.
Yes, Richard. In fact, in the last 25 minutes, we did get it confirmed. It looks like it's 32 reals, or $8.53 a share. That would give it a valuation of $1.7 trillion, which is at the high end of the range, as you're suggesting, beats Wall Street estimates, and would get them $25.6 billion on the fundraising. And again, beating Alibaba, as two senior investment bankers have told me, in this case, size matters for bragging rights. It also helped that they limited this to Riyadh. It's only 1.5%, not the 5% we spoke on Wall Street or London or Tokyo. And they went to their friends in the UAE and Kuwait to raise up to $2 billion, which helped in this process going forward. So it's not as big as we expected. We were supposed to get an official announcement, Richard, 5 hours ago. Nothing official. We had to kind of bang on the door and say, what's going on here, and did get that confirmation of that higher price range.
So OPEC and OPEC Plus are looking to cut production, quite a large cut in production, to try and support the price. They must be really seriously worried that the price is about to collapse.
Well, it's a perfect way of putting it, Richard. Something is brewing, and quite substantially here. Yesterday, they were talking about a rollover of the existing agreement of 1.2 million barrels a day. Then last night, I heard 400,000 barrels more at 1.6. And now we spoke to the Russian minister, who's saying 1.7. I said, hey, what's going on here? Why the alarm? Here's Alexandr Novak.
We've arrived at a conclusion that in order to safely go through the seasonal demand trough in the first quarter 2020, it could be recommended that countries additionally cut up to 500,000 barrels per day of crude oil.
Some horse trading going on here, Richard, between Abdulaziz bin Salman, the new Minister of Energy of Saudi Arabia. You're right, they're horse trading. They're just going ahead for the first quarter. So it means that they're very worried about U.S.-China trade tensions and spillover, perhaps, to Brazil, Argentina, and France. Doesn't look good.
But, John, we're in winter, when heating oil is in demand, when oil production's, admittedly, it's not the driving season, but this is the time when there's supposed to be much demand for oil in the northern hemisphere. So that raises the question, if you're having to cut production to price support now, then things are getting very, very dodgy for you.
Well, I tell you, you're on your game today, because I think there's a wild card still here in the United States, Richard. The question, can they sustain that gain that we saw in 2019 of 1.8 million barrels in 1 year by the United States? OPEC sources tell me they think that's going to get cut because of Wall Street not wanting to support the shale producers. But the mood in Saudi Arabia, especially with the IPO, is we're not going to carry this burden of the cuts on our own. They're leaning on Russia and Iraq and other major players. Come on and officialize the cuts that are on the table.
John Defterius in Vienna, thank you. Safe travels, Godspeed for now. When we return.